seen, this app looking at your money moving, being wired, being saved. Probably Belvo infrastructure is underneath it. 80 million connected accounts. You've been backed by the Y Combinator and Citi Venture. And just this year, as we were mentioning just before, you're adding the AI layer on top of it. So Pablo, welcome.
Thank you.
Before we start, the audience, I want to start with a provocation and actually continue on the intro we just had. We keep using the word fintech as if it's still a category. Well, remember 30 years ago, a bank was a building. 20 years ago, that was a website. 10 years ago, a bank was an app on your phone. Today, it's increasingly invisible. In the moment you pay, you save, you wire your money. And in 10 years, maybe it just doesn't even look like a bank. So we are living through this transition that most people call a fintech disruption. But I think it's much bigger than that. It is about infrastructure. And I think actually Belvo is one of the clearest examples about how this shift is happening in real time. So let's talk about that right now, and let's see where we go from there. Pablo, so you came out of Revolut, and you saw what open banking was in the UK, and you decided to build the equivalent in Latin America. But obviously Latin America is not the UK. So different regulators in every country, different banking culture, and widely different level of digitization. What did you get wrong in terms of how hard it would be, and what did you find much easier and, I guess easier than what you expected in the first place?
Yeah, I mean, first thing, it's incredibly hard to build an infrastructure company anywhere in the world, particularly in Latin America. And we've been at it for 7 years now, and it's been quite the ride so far, as we were discussing earlier. I think one of the things that proved a lot easier than we expected was not having any experience in the region and not having any experience in infrastructure. Obviously, my co-founder and I, we'd worked in fintech for a long time. I also come from a financial services background. We were leveraging and building open finance technology here in Europe, so we had good understanding, but completely different universe. But I recall when we were starting, so this was 2019, 7 years ago, people said fundamentally beyond the infrastructure, the layers that get built on top, the use cases, what open banking and open finance is about is ultimately people giving you the right and the authorization to access their data and move money on their behalf to get better financial outcomes. That's it, right? That's our mission. That's what we enable. And when we talk to folks in the industry, people were very skeptical. They're it works in Europe, sure. It works in the US, yeah, we've heard of Plaid, Finicity, and so on. It's never going to work out here. People don't trust money things. People don't trust banks. People are never going to opt in, which is required, to share their data or to move money in more efficient ways. So actually kind of coming in with a kind of outsider mindset kind of really helped us a lot, not having all the social cues and all the kind of, even the social capital coming in.
You were mentioning earlier on when we had this chat that you have zero origin from Latin America, and if anything that helped when that could have been seen as a hurdle.
Yeah, exactly. And we're not afraid of going into the room and just playing the gringo a little bit sometimes. Obviously now it's been a while, and
they know you.
We know the region very, very well. But in the beginning, it was a big advantage to have this outsider's mindset. So I would say that's the biggest learning. And this is applicable to any business, I believe. When you start off, and people often say no, you need to have worked in the space, you need to have the connections, you need to have all the ties. No, that's bullshit, right? So if you come in with outsider mindset, you have no bias, you can do amazing things. Second thing, what was a lot harder than we expected, was building for the region, right? So we always came in with this vision of, hey, Latin America has the potential to become one single region, right? So we had seen already back then some cases of companies extremely successful, very large financial services that were operating in a bunch of countries and that had Latin American-wide ambitions, right? So companies like Mercado Libre, like Nubank, back when we were starting, they already had multi-country operations. And we thought, oh, like this is going to be the default in a very, not too distant future. And so it will be easy to build, or easier than it's proved out to build the infrastructure that powers all of these like multi-country. In the end, what we had to do is like build completely different companies from the ground up in the different countries. Right.
Well, I mean, on the geographical strategy, which country did you start with? Was it like just the bigger, or did you take into account the level of digitization? Like it's good when internet is everywhere, somewhat.
Yeah, that's a good question. I mean, we started in Mexico. Like we always knew that to kind of build a category-defining company in the region, like we had to kind of nail Mexico and Brazil, because our model and any API model, any infrastructure model, like all the drivers that are kind of powering our business, are driven by population, GDP, spend, etc. And if you take Mexico and Brazil, that's 80% of the region right there, right? And
Absolutely.
Back in the day, we said, hey, Brazil maybe is a little bit more unknown, a little bit more unfamiliar. Like today, my co-founder and I, we speak Portuguese. Back then, we didn't, right? So the obvious choice was Mexico, and also we had like some more connections and some more ties to Mexico, where it was a little bit easier to get started and build.
Right, interesting. So you were mentioning you have a background in, some time ago, investment banking. I do too, and it's interesting to analyze a situation from both angles. And typically, you're building now a data layer that banks in Latin America should have built themselves. And now you're actually selling your product to the banks. So that's, I find it both fascinating, but also somewhat paradoxical, because like you're the vendor of the banks right now, and the more data you accumulate, the more AI layer on top of it, the more it looks like you could become their competitor at some point. So, first of all, what do you think about that? What's your strategy? And that's a larger question of like, how do fintech companies position themselves in front of the large financial institutions like banks, or could be asset manager, whatever. And at what point does the infrastructure provider become the institution itself?
Yeah, I think a good analogy to kind of define what we do and how we are positioned with the banks, and also we serve kind of any financial innovator, right? So we serve fintechs, we serve banks, we serve large tech companies that have a financial services arm. But the way to look at it is like, we are kind of the middleman, like the intermediary that is like, unbiased, that is, completely just there, transparent, and just like a middle layer that doesn't take sides, right? And the best way to look at it is like, what is a card network today? What is Visa? What is MasterCard? Sure, like in the 1980s or you could say, well, Visa's doing what the bank should be doing themselves. But in the day, like it's come out that it's a, critical infrastructure for the payments world today.
Yeah.
And the banks are not going to do it. So, what we found is that, when you build out, and this is like infrastructure for, enterprise in general, there's always a debate around buy versus build, right? And banks do many things, or fintechs do many things. They specialize in a few things, and they do that very well. But sometimes building out like critical infrastructure for very niche, very specific things, like is not something that they want to do, because the opportunity cost of like serving their customers like is a lot higher, right? So I think we found a very good sweet spot where we've generated and we've built a lot of the trust that's required. Like mind you, it's been 7 years, and getting the foot in the door with a lot of these players has taken a long time. And we oftentimes joke at Belleville that there's one thing that banks will never want to do, which is being first at something, but they dread even more being the last at something, right? And as soon as one does it, everyone wants to follow suit.
Completely.
And they want to copy what others are doing. So I think there, like we found a way to kind of make it work, to be like very independent, very transparent, and very trustworthy with the banks. And I think it's in our mandate, and we tell them that we are a B2B infrastructure. We're like 2, 3, 4 layers detached from their own end users. sure, like over time, like we are building more end user focused applications, but it's always like powering what they can do. Like we never want to become like a lending business.
Yeah.
We never want to become a credit card issuer. But we obviously have to be close to end users to know them and know the use cases and serve our customers better.
Yeah, I would say that that's a cost-opportunity ratio story as well. I mean, to challenge what you're saying, and I agree with you that in your case, that works well. But one of my area of expertise as well is blockchain technology. And blockchain technology started, obviously, with the startups. And one of the segment of blockchain technology is stablecoin. And it did start with large institutions from the private sector. So the USDC for the one like Circle company or Tether company are private. And for the past few years, large institutions, in particular banks, have realized that the power of that technology at an infrastructure level and are now all considering in different manners how to upgrade their own technology. One thing they're doing is issuing their own stablecoin because they got it. Like the opportunity is such, there is no way they're going to continue to see the deposit flowing to private companies like outside bank and even challenging their job, which is about getting the deposit and lending. So I guess both can exist. Sometimes they realize, oh my God, like the fintech. They think they're going to kill us, but there's no way that's going to happen. We're going to issue, we're going to keep the deposit, we're going to do better than them, and then you have like this, I guess, side evolution from that we're seeing right now. Anyway, we have, I guess, to talk about AI. So earlier this year, you launched what you called an intelligent ecosystem, which is AI-driven decision tools sitting on top of your open finance data. So that's obviously a significant step, which is like beyond what you've been doing for now, which is kind of the plumbing. And obviously, like I want to make sure this is not just marketing. So tell us, what does this AI is effectively doing on top of your data layer that you couldn't do before? And what's the use case? I mean, did you discover any new use case, any surprising use case by bringing AI in your platform?
Mm-hmm. Yeah, I mean, first, like one of the fundamental learnings we've made over time is that like our customers, they're looking for outcomes. Like they're not looking for a plumber, they're not looking for the data, they're not looking for the rail. They're looking to serve their customers better. So they're looking for outcomes. And as we were thinking about how can we serve our customers better, like we're always, defining products that can kind of serve that purpose. And, one of the things that is, really relevant about what we do is that, we power, a vast majority of our customers like have some form of angle in the credit space because of how Latin America is. Like credit is typically like the entry point to, the financial world and to the money wheel and then to the prosperity wheel and so on. So that's kind of like, how people get included into the system. And, talking to our customers, like they said, well, look, like the data we access via you helps us with, our top line, right? It helps us underwrite more while maintaining the same level of risk. Why? Because we have more data that we didn't have access to before. We can actually see people that are too thin file or don't have data in the traditional system, and that's great. So more revenue at the same amount of risk.
Yeah,
that's great. Then we have the issue of we have to serve that kind of loan, right? So we have to collect the loan, and that's where our payments product come in, which is like the rails that we develop are more effective from a UX perspective, from a cost perspective, et cetera, to collect that money. That's great, right? So we're impacting their bottom line. But then we found, well, look, we're sitting on hundred millions of records of people and businesses. We're powering north of 50 million payments every quarter. More than $1 billion in annualized TPV. We can connect the two, and we can create additional solutions that provide better outcomes. And
yeah, it's like trying to figure out what's the value of your data set somewhat.
Exactly. And one of the things that we saw was that we can take the data, take the payment rails, and actually make that a lot more intelligent with AI. So one of the products we released recently, which is we call it AI-powered collections, because we are connected to bank accounts, we know when money drops in the account, right? So if you're a person living in Sao Paulo, you've connected your Bradesco account to your Nubank account, and Nubank can see when the money is dropping into your account, like your salary.
Yeah.
And then that's the smart moment when you can be like, okay, well, I'll collect the loan when the money drops. And all of that we've created with,
optimizing timing, etc. Like just watching at behaviors and.
Exactly, and that's all like agent-based. That's all like you're looking at the account, you're processing the payment, you're then kind of interacting with the collection CRM. It's a very complex operation, but that's one example of some of the things that we do. In the end, generating hyper-personalized financial solutions for our customers' users. Yeah,
would you say that increased adoption of your product as well? I mean, did you check that already? Do you have enough time behind you to see that this additional layer of AI plus the new functionalities are increasing adoption?
Yeah, and I think ultimately, our customers, what they're looking for is ROI, right?
Yeah,
so, the example I was giving on, we want more revenue with the same amount of risk. We want, a better bottom line with, less non-performing loans. And here it's the same, right? So, I want to collect more in a more intelligent way. I want to reduce my non-performing loans. And typically, the customers we work with, large entities, we work with hundreds of companies, we work with kind of the bigger enterprises of the region. They're very ROI focused. So it's like, hey, you can test this out really easily. You can see the ROI very quickly with 10,000 loans, 20,000 loans, 30,000 loans. See if it works.
Yeah.
You can see the results in 2-3 weeks. And from there, you can just implement it and get going.
All right, interesting. Okay, let's move to inclusion. When we think about open finance, we cannot not think about inclusion. And we talk about, like I was mentioning, 80 million accounts connected, but your clients are primarily fintechs and financial institutions, so obviously not the unbanked, if I may say. When does open finance infrastructure actually reach the person who doesn't have an account? And would you see that as one of your missions?
Yeah, absolutely. And I think that's a fundamental difference between open finance in Latin America versus open finance or open banking in Europe, or open banking, open finance in the US, where typically, the probability of being able to explain someone financially by accessing their bank account is pretty high, because bank account penetration is 90% plus in most of the countries, right? In Latam, you don't have that. You have seen in Brazil and Mexico, very big push towards bankerization, thanks to fintech adoption, the growth of new banks and the like. But still, there's a big population, as you say, that is outside the, let's say, formal financial sector. So that's one of the learnings that we made kind of early on in the journey, which is, hey, to really push for more inclusion, to really kind of generate more democratization in financial services, we need to include data sources that are not just banks, right? And today, when you look at kind of our platform, our open finance suite of data products includes banking data, includes employment data, includes fiscal data. So you might not have a bank account or a traditional bank account, but you might well have a formal employment that's paying you a salary every month, and that's registered on some government database, right? We collect that, and we transform it, we enrich it, we create a profile, and we share that with our customers that want to know their users better. So kind of creating that entire ecosystem of, to us, that's really what open finance is, right?
Yes,
so open banking is banking.
Completely.
Open finance is open banking plus 1, 2, 3, 4 different sources. So that's really had a massive push on inclusion, as we've seen it, because what that's allowed to do is that not only are you able to go beyond people that don't have a bank account, but you're also able to go beyond the people that don't have a credit history. Because as I said earlier, the main access point still today to finance or money in LATAM is credit. But paradoxically, if you don't have a credit card, or if you don't have a loan and you don't have a positive record, then you don't show anywhere, right? So you don't have a score.
Yes.
People can't give you products if you don't have a score. So what we've allowed is like to really create a new category of understanding people financially outside of traditional data sets. So the impact on inclusion has been very, very big.
Yeah.
Now also the challenge is on
That's a big thing.
doing more of that also on the payments front.
Yes.
But yeah.
Absolutely. Okay, we have like 1 minute and 18 seconds. Very quickly, how do you see Latin America like in 5 years? How do you see it evolving? But like the wholeness picture, who will be lagging? Who's may not make it, you think, or later?
Yeah, I think definitely more interconnectedness. So, we very much believe that the thesis with which we started, which was that Latin America as a region will become a reality. We're starting to see that more and more. And you see, for example, in the protocols, for example, on instant payment infrastructure, right? So Pix in Brazil is taking off like crazy. And that's become like the go-to or the norm in terms of protocol for other countries that are adopting it, like Breve in Colombia. So we're going to start seeing a lot more of that. Also cross-border, we're going to see a lot more, easier use cases and easier to kind of do cross-border money movement. Who's going to be left behind? Whoever does not have a digital footprint is going to be left behind, right? So people that are very deep in the rural areas is going to be hard because if you don't have any sort of data digitally about you that can be shared, it's going to be hard for you to kind of enter the system. And also folks that don't start adopting technologies like open finance, right?
Yes,
so
absolutely.
they'll start kind of drifting away and losing relevance.
Thank you, Pablo.
Thank you so much.
That was a great charla, as we say. And thank you guys. I hope that did bring some good perspective, not only how fintech is evolving, but also across the region in Latin America, if you guys are involved in that part of the world. Thank you.